Good afternoon, everyone. Welcome back to the commodities analysis video. Today we'll be looking at natural gas, UNG, as well as gold, silver, and the US dollar and the oil. So we'll be looking at their support and resistance levels to potentially play off of and a couple of patterns that's potentially be happening, as well as what's the most likely scenario where price will be heading into later this week. And I'll put the timestamp below. So if you guys want to skip to any of the commodities that you want to look at, just click the timestamp and it will jump over there. All right, let's get started. So we're looking at natural gas. So I did an update video all over the weekend last week saying the most likely scenario is an equilibrium. And it's pretty much playing out exactly. So we were over here on Friday. And because of a initial big move and the drop is within the prior move, the most likely scenario is an equilibrium, meaning every single move is going to be within the prior moves. So after a pullback from Friday hitting its key resistance at 3.65, it's very clear that we couldn't get over this structure. And we're starting to shape out that equilibrium continuing. So we can say that potentially this maroon looking support right here would act as the equilibrium support because this is the initial move. This is a drop. So we bounced from there. And now we bounced. Now, if we come down, there's a good chance that we may bounce from this area, 3.185. It doesn't have to go all the way down here for form an equilibrium. It could bounce from here. It will still be an equilibrium, or it can even bounce from where we are right now and still form an equilibrium. But if it keeps dropping and showing no signs of bounce, and chances of it bouncing from the last level of equilibrium support will be the most likely scenario. And now we can, if we draw a resistance here, some people would just count this as one touch, but we can just say this will be a visual guide for the resistance next time. If we do bounce from this equilibrium and continue up to this range, this is what acts as resistance. Yeah, so no signs of fake out. So let's zoom into the hourly chart to see if there's any signs of bounces at the moment. And there's absolutely zero. So you can see we had big drop, hourly downtrend confirm, and just went straight sideways. So currently no signs of bounce yet at this moment. And we're probably going to continue to head lower if we can't get over this teal looking line, which is a teal 12 EMA. Just have to type in indicators, exponential moving average, and it go to 12. So we can't get over that. We're not going to go anywhere, as well as we won't form an hourly uptrend here. So no signs of that. Next level I'm looking at, if we do continue to drop, 3.25, to see if we may bounce from here or not. If we don't hold 3.25, then that maroon looking equilibrium support is where we'll be looking at, as well as 3.18. But as of now, no signs of bounce yet, so bears are in control on the hourly charts. Yeah, so we'll probably see if that equilibrium just continue to shape up or not. All right, let's take a look at UNG. So UNG is a tradable ticker for natural gas, and it's looking pretty similar. So big move up, big move down, big move up, big move down, and we're also forming a tiny range. This equilibrium is not as pretty as the other one, but the idea of an equilibrium is just a tiny range, and every move is within the prior move. So, and we're getting pretty close. Let's see here. Yeah, so if natural gas has another leg down, UNG is going to be hitting its support. Bounce, bounce, bounce. This one, bounce. If that doesn't bounce, then the equilibrium pattern is gone for UNG, but it'll likely still be intact for natural gas. Now, same thing on hourly charts. No signs of bounce at this moment. It's forming a bear flag, and if it breaks today's low right there, it's just another confirmed bear flag, and with more follow through on the downside. Yep. And if we do get another leg down, so if natural gas decides to come down here to 3.25 and then bounces, then UNG will probably hit this maroon uptrending support area and then bounces from there. So first thing I want to see in natural gas is an hourly trend change or even a 5-minute trend change to give us really anything at this moment, because you can see we have nothing going on other than the bear flag that's currently flagging. And if the bulls can hold this low bounces, we can negate the bear flag, but so far it's not looking like it's going to happen. We're just pretty much one candle away from bear flagging, breaking the bear flag, confirming it. So yeah, bulls either show up tomorrow morning or we get another leg down. All right, let's take a look at oil. So oil is also forming a tiny range. You can see this is actually very clear equilibrium here. Big move up, big move down, within the prior move, and it bounced today as well. So if we get a solid candle, red one tomorrow, and it closes outside of that, then that's an equilibrium tiny range bear break. But as now, it's still within it, even though we came a little bit below it, but we still ended up closing above it. The pattern is still valid for me. And let's take a look here on the hourly. So hourly charts is in a downtrend, as well as the daily is also in a downtrend, but lacking follow through today. So we'll see if tomorrow, if we get more bearish follow through, then it's a clear bear break. If not, then we're probably going to come up to 78.84 again and continue to tighten up within this tiny range tomorrow. Very clear. We'll know where oil will be trading. If we get a bounce, we're going to come up here, break this, then we're probably going to test this downtrending resistance. If not, then we'll retest on the bottom of this range again. All right, let's take a look at gold. Gold is testing the prior support, now acting as resistance. So you can see this support right here, support, and now it's going to act as resistance because we're under it. So pretty much where we yesterday on Friday is the resistance, as well as it coinciding with this top of this resistance, which is this 2004 level. You see the amount of times we trade in that zone right there is pretty crucial. So it makes perfect sense for gold to reject slightly from there, but we are still in striking distance to break that resistance. So zoom to the hourly chart and see. So straight shot to it, came back down. If we break today's low, let's say an hourly downtrend confirm, and we may get more follow through to the downside if we break this sideways structure over here, because this is where a lot of people traded recently, and this was the breakout, lacking follow through. And then if we confirm an hourly downtrend, then bears are going to fall through a little bit more, but we need to break the sideways structure for the gold structure to be starting to shape up more red flags, because if this structure holds, then all the bulls that are bottom there are safe and they wouldn't none of them would sell, right? So if we don't crack through the structure, then nothing really happened for the bears, even if we get an hourly downtrend. So bulls, you want to hold above 1963. Bears break this level, then we may get a lot more follow through from the bears. Daily uptrend still intact. Everything looks good. All right, the US dollar. Yep, still just going sideways. And nothing to really look at here. As long as we know where the dollar is trading within 106.8 resistance and 105.6 support, then it's not really going anywhere. So no clear trend either way. So we just have to look at these two levels. As long as it trades within these two levels, know where the US dollar is going to be. Hourly uptrend to hourly downtrend, same thing, back and forth, just goes back and forth. All right. Let's take a look at silver. Gold, actually the dollar is still forming that equilibrium. See the maroon looking lines? Resistance, support. Yeah, it's the equilibrium as well as this sideways range. Tested on Thursday. Yeah. If it gets wider and wider, the less likely it will touch these ranges. But yeah, so I would go with the sideways structure now because it's getting a little bit too wide, but we'll see. All right, let's look at silver. Silver at the moment is slightly weaker than gold, but it's still holding because gold is still holding. And so gold made an alt 52 high, while silver didn't. You can see we didn't make it. It makes sense because it's 23.4 is a pretty strong resistance level. Prior support, bounced off many times. Support, resistance, resistance, a ton amount of support. So when we're under it, price is going to act as strong resistance. So we can't get over it twice, and that means gold starts pulling back, which is pretty likely at this moment. Then silver is going to pull back even more because it's relatively weaker than gold. So we got to be watch on that if you guys are metal traders. If gold starts to weaken, then we may shape up a bigger drop on silver, but we'll have to see. Usually silver leads, but sometimes they shift correlations, so we have to take a look at that because silver did lead the bounce first, then gold did. All right, that's all you guys for commodities. If you guys got any questions, feel free to comment below, and feel free to like, share, and subscribe. You guys made it this far, and I will see you guys sometime later this week. I'm still currently traveling but I'll try to get some of these videos in when I have the time. All right, I will see you guys around.